Hi, what if I were to tell you mortgage lenders are hiding secrets that could cost you tens of thousands of dollars? The next few minutes, I'm going to expose these dirty little tricks and show you how to beat them at their own game. So let's get going. But first, if you like this video, when we're done, consider subscribing and liking it. I appreciate it. Ever-changing mortgage interest rates. Industry doesn't like you to know that, but when you go to get your pre-approval to the point where you're actually applying for the mortgage, you don't lock in a rate until the moment you apply. It's called the lock-in period. So understand that when you're getting a pre-approval, the day that you go to apply for your mortgage, you might be very happy with the person you've been talking to. But if it's 30 days, 60 days, there could be a whole different landscape out there. Banks versus brokerages. Which one is better? On the upside, brokers have access to many different products, and maybe they can get you the best deal that's out there that day. Banks, on the other hand, are more convenient. You go to your bank, you just figure, well, let me just get my mortgage at my bank. That could be good, it could be bad, you never know. So it's very important to understand there are two different animals out there. Banks are limited to their own products. So that's an important issue. Sometimes the bank might have the best product. So when you're going for a mortgage, it might be, and it is absolutely recommended that you look at a bank and a mortgage broker. And I'll get into that more a little bit. First-time buyer programs, are they too good to be true? A lot of times there's some great buyer programs. Now, right now, when we're making this video, we're in a market that interest rates are high. Housing in many areas is hard to come by. So there's a lot going on there, and banks are fighting for the mortgage product. They want your business. Mortgage brokers are fighting. So this is a great time to compare and save. There are down payment assistance programs. There are special programs that both brokers and banks offer. There are forgiveness programs, there are grant programs, there are low interest programs. So again, the programs can come into the bank any day, every day, once a week. They could have a program. We just said a small local bank that we've been recommending to first-time buyers because they have a wonderful program that is a 0.5 percentage point below their interest rate without purchasing anything, no extra cost, 0.5% below the market rate. So if everybody's the same in the market and this particular loan is a 0.5 percentage point below, that is tons of money, tens of thousands of dollars. One of our clients, if they kept the mortgage for the entire time, would save over $100,000 on their mortgage. So again, check with the banks and the lenders at the time you're ready to actually apply, because these programs change all the time. The small local bank is one of my favorite places to at least check. When I say local, so you have the big giants, the JP Morgan Chases, the Wells Fargo, Bank of America. Don't get me wrong, they sometimes have decent programs and a lot of people use them. But that small local bank is going to be hands-on. You get in trouble with your mortgage, they're going to be right there for you. So think about small local. A lot of times if you're building new construction, small local banks are the best. Sometimes if you are credit risk, lower credit score, the small bank might not be a good fit, neither will the big bank. Maybe it's the mortgage broker has to fit you into a niche product with a specialty lender. So understanding this is going to save you a lot of heartache, a lot of pain. The credit score. Now the credit score, so important. You'll see advertised, we start at 650. Quite frankly, 650 is the bottom of the barrel. It's a horrible score, and you're going to want to get that score up, okay? Because you're going to save a lot of money. Once you start getting into the 700s and especially into the 800s, you're a good, very strong risk, and that interest rate can come way down. So if the interest rate is averaging 6% and a high credit score can get you 5.75, that's a 0.25% off, tens of thousands of dollars of savings. There's ways to improve your credit, and if you have a score below 700, you should work with a good mortgage broker. We're going to bring that score up. So we're going to do our research and we're going to bring that score up. Decoding the loan estimate, hidden fees. Once you have an application, all your information into the bank, the broker, or the lender. And you could do this simultaneously. You could do it 3 different places. Get a local bank, get a mortgage broker, and you could even use an online mortgage lender. if you're comfortable and you want to do all that stuff, if you're comfortable working on the computer. And you can ask each one for a loan estimate. And this is industry jargon. You'll find out what the fees are, what the origination fees are there any hidden fees? And you just ask questions. Now you can do apples to apples comparison on your loan. And if you pick the right three, because you don't want to just pick JP Morgan, Wells Fargo, and Bank of America, they're all the same. They're all going to give you the same number, they may have little different programs, but you want to pick a local bank, you want to pick a local broker, and you want to pick a third option. It could be one of the big banks or it could be a specialty lender online. There are a bunch of them. And when you have that in front of you, you're going to be better informed to make a great decision. Your attorney, your realtor can help you with this stuff once you have this information in your hands, because the most important thing when you pick your lender is the seller going to accept your offer using that lender. Realtors tend to like certain lenders and dislike others. This is a very important aspect of borrowing money. You may get your offer turned down just because you picked the wrong lender. So that's important to talk to your team when you're in this market and determine if they like the lenders you're working with. The loan estimate, if you start with one bank or one broker or what have you, is a great negotiation tool. It's a great tool to have so that you can say, look, this is the best deal I'm getting. Can you beat it? If you like the other person, maybe you were working with a broker to get your original pre-qualification done. You can show them what loan estimate you got. And if you have the great credit, you're going to have negotiation power and they're going to work with you if they like you and they want your business. The refinancing strategy. So in this market, interest rates are up high. Back in 2019, they were down close to 2.5%, and now they're between 6 and 7s. They're moving all the time. So the refi strategy is something the banks don't tell you about right away. But many banks offer, if the rates come down, they'll refi for you and they won't charge you. You don't want to find a lender in this market that offers that and make sure they put it in writing. The co-signing caution. If you are a parent and you're going to co-sign, you have to make sure you're doing this with your eyes open. So once you co-sign, it's just like you have another mortgage. So if you're thinking of making a large purchase, you're going to have to think twice and weigh those options, because co-signing on someone's mortgage affects your credit and your ability to borrow. So remember that. And lenders aren't going to tell you this stuff because obviously a co-signer makes the loan much stronger for the banks. And you'll want to know that if you're asking your parents or other family members to co-sign for you, that there are those issues that can come up. And there's a couple of clauses in the bank's paperwork that can goof you up. Occupation by borrower. If they have this clause in there, it means that you can't move out and rent your house. Some banks require you to stay in the house for just 1 year. Some banks require you to stay in the house while you're paying the mortgage. So that's important. A bona fide sales clause. Sometimes you're going to want to change the title, maybe move it over to an LLC for planning purposes. Maybe you run a business, or you're going to want to add a family member onto the deed. You have to make sure these things can get done when you're applying for that mortgage. You want to ask, so think through this. Do you own a business and do you want to make those type of changes? Just check with your lender. Some allow it, some don't. Reinvestment fee. If you're going to close out your mortgage early, and this happens a lot with commercial if you're in the multifamily area, if you're going to refinance and get a new mortgage or sell early, there could be a fee involved. And some of these fees could get very steep. So you just want to make sure, mostly single family residential, they don't have a prepayment penalty. And most of them won't, but they can. So you make sure that you're asking for these things. Tell me what you think. Are you looking to purchase a house? And if you are, do you believe that getting multiple offers from lenders is going to help you? Leave a comment below if you think that's a good idea. If you want a list of banks that we use, now we're in Connecticut and we use some that are national, some that are local. But if you want a list of banks that we recommend, that we like working with, and that we feel offer the best deals out there as of this recording, we'll put a link in below and you can download that link and always message us if you have any questions. Thanks for watching this video. I hope it gives you some information, some food for thought, and we look forward to seeing you in the next video. If you are in the market, watch this video right here.